Next is going to be lack of parks, schools, public service, or conveniences, meaning anything around, any laundry facilities, anything that you would go to on a day-to-day basis. For me, it's Petco. Okay? All right. Excessive city restrictions and anti-development attitudes. Remember my rules, guy. Only deal with motivated people. You got to assess those attitudes. Adverse roads, traffic, and future plans that can interfere with access and depressed economic markets. Guys, I'll tell you right now, you're gonna think I'm crazy for saying this, but if the pizza guy doesn't deliver, I don't go there. That's what it's about. If the area is that bad, that depressed, why go there, right? You're not going to want to go and have a management company look over property. I got people trying to do stuff in different areas, and they're like, look, it's a perfect niche. We can go ahead and acquire all this property and bring in management companies and make it happen in these war zones. And I say to them, look, you go ahead and deal with that. Those are the low income areas. There's just something that I don't want to deal with, right? Talk about tenant headaches. What about management headaches, right? Deal with people that want to do business with you. Okay. Now, 57. This is pre-screening income property. The last one was pre-screening land. What to look for? Green flags. Low asking price for green flags. Price per unit for apartments and per square foot for all others, just like we went over. We went over all of those, okay? Rundown property. We're only looking truly for ugly cosmetic fixers, not for problem properties that have structurally major structure issues. Because what comes with major structure issues? A big fat check, right? Doesn't mean it can't happen. But did you guys see the picture of the apartment building that I shared with you guys earlier on recession-proof properties? You guys remember what that thing looks like? Looks like it's in the middle of a war zone. All right? That was just an unfinished property. But that is a huge fixer. Huge fixer. All right? Low vacancies. Write this down. 25% or more if they can be filled. Look for that. Vacancies. Large vacancies. 25% or more. Now, we talk about master lease option. I like more vacancies, but if you got 100% vacant property for master lease and you're going to go ahead and guarantee the income while you get up the rents, is that going to be difficult to do when there's no income to guarantee? Yeah, guys. Just think logically, okay? Then you want to know for 25% or more if they can be filled. So write that down, if they can be filled. You should be taking your notes next to it. Next to it. See, right here, large vacancies. Okay. All right, you're the boss. Low rents if they can be raised to market. That's something to look for as well. Low rents if they can be raised to market. Remember, market occupancy, market rents. Write that down. Market occupancy, what's the percentage that it's leased up? What's the market occupancy? Remember I said it's 85% usually across the board? But what about the market rents? We want to know the market rents. Now, Kevin's was what, 800, he said, or something like that? And then after Hurricane Ike came in, there was a major demand. So now it's at 1350 or whatever it came out to, right? That's the new market rent. So you want to make sure that you're consistently at market rents. Too many people, the old pros, the veterans, well, my property is 100% leased up. Oh, yeah? When's the last time you raised the rents? Raise rents. Why would I raise rents? They're 100% occupied. Better look at your numbers. They could be missing out on a boatload of money just because they don't want to raise the rents. We're going to talk about when we raise rents as well and how to avoid huge vacancy issues when we raise the rents because we're not doing it all at once. I'll give you that food for thought now. Okay, seller financing, 35% or more. Guys, I've gotten 100% financing. Kevin told you he got some seller financing as well. We get 85% seller financing on a norm, 90% financing on a norm. You know how you get seller financing? Just ask. It's the cheapest money you'll ever get by flapping your lips. That's how it's done. Additional land to sell off or build on. We covered that. That's additional land. Distressed motivated sellers must sell due to financial health issues, etc. They're going to advertise that they're motivated. What was the little clip that I showed you just came through to my email? That was motivated sellers. Now, out of all those properties on their portfolio, whatever there was, 8 or 10 properties, there could have been a couple people that were fluffing. They just are fishing. But some other ones, I guarantee, if we recall on all those, some of them will have major issues on why they want to sell. What is it? Yes, high cap rate. For the high cap rate, it's 10% to 12% or more. But again, guys, don't be so fixated on the cap rate when we buy. Please don't. Please don't. Don't get hung up on cap rate. I hear it all the time. I do. It's nonstop, and I just keep trying to reassure you that it's just not where it's at. Not for this, not for the scope of the way we're doing it here. Additional land to sell off or build on. We covered distress motivated sellers. We covered property in foreclosure or pending bankruptcy. That's no different than land. Feuding partners. That's no different than land. That'll never change. And also low debt or free and clear property. We always want to look for low debt, free and clear property. That is so important to know that there's low debt or no debt, because we know that then we can go ahead and create more seller financing. All right, what to stay away from for income? Asking full retail or market price, cap rate lower than 10% with no upside. Now guys, if you want to go buy something that's got a 7 cap or what have you, and it looks good, and you can get the thing cash flowing after a period of time, maybe 6 months to a year, and you want to be a retail buyer, you do that on your own. Don't submit those to me, because they will get rejected out of the system automatically. All right. So difficult, complex projects that take years to complete or turn around, or where the seller wants all cash. Seller wants all cash, it's retail. All right. Unrealistic, unmotivated owners. Now, the only rule to thumb for when the seller wants all cash, we can go back and renegotiate, because some of these deals are going to be retail when you see them on LoopNet. Who here's been on LoopNet? And I witnessed some retail deals. That doesn't mean, just because they're asking retail doesn't mean, guys, that they're duds. It just means that it has to meet some additional factors on your acquisition criteria sheet. If the guy or gal is asking retail price for a building, but yet it shows that they don't owe much debt, and that the property has a future projected value, and they're selling it on the projected value, the hope, and the thing's only 50% occupied and 50% vacant. That's a great way to call that retail deal that everybody else is going to pass on. You can call and do a master lease. You understand? Yeah? Okay. Now, unrealistic, unmotivated owners or unsolvable problems. Here's some unsolvable problems. Got it. Lack of parking. Buddy of mine put a deal under contract out in San Francisco. All right? And I played around out there too. I know what's going on in the San Francisco market and northern and southern. I just actually got back from area out in Napa. So I know the area all too well. It's beautiful out there. It truly is in certain areas. But you put a building under contract and wanted to turn it from a hotel over to condos. Now, Trump is actually one of the people that actually gets out there and makes it happen with doing so. And the way that he does it is he takes his hotel, and he'll put his hotel from floor 1 above the lobby all the way up to floor 46. And then he'll do floor 46 all the way up to floor 90 or whatever in New York, the really tall buildings. And everything above the hotel is all condos. So they're full service. You live in them half the year you rent them out. That's the way it's done, right? It's very smart. By George Ross. Now the thing about it is, for this particular deal to happen, he had to have, not Trump, I'm talking about my buddy, he had to have certain things happen. One of the things that he had to have was parking. And the reason being is, if you have a hotel, you have a valet service. Valet service drives your car around the corner and parks it somewhere else. If you have a condo, that condo should come with a space. Not a lot of people are going to want to live somewhere without a place to park their car, right? That's just a no-brainer. So the plans actually went down. It was actually the Majestic, for those of you who know it. Beautiful building, historical building. And on that note, guys, let's go ahead and mark down, since we're here, on pre-screening income property, because it's bound to happen. It's bound to happen because I get them thrown at me all the time. You know the email that just came through and I shared that property with you? That particular brokerage sends me deals all the time in the same area, right on Collins Avenue, right in Miami, and there's a reason why I never pursue those. I had a deal under contract at one time. It took up a whole city block. And what happened is it's a historical landmark. When there's a historical landmark, you got to keep the facade, the front of it. You cannot change it. You also can't break out and change the mix. Remember what I said mix was earlier? The bedroom mix inside the place, whether it's going to be 2-bedroom, 3-bedroom. We wanted to break out walls. We wanted to go ahead and expand the space. All right? Can't do that with historical. Can't do it. Once it's historical, it's historical. All right? So under pre-screening income property, what to look for, what to stay away from. Make sure you write down there on what to stay away from down at the bottom. Historical landmarks that cannot be put to a higher and better use. I'll save a lot of time for you guys. Okay. So I covered low debt. I also went all the way down here. I said lack of parking. We're on unsolvable problems. So that's lack of parking. Too much repair cost as well. Make note. Impossible to lease up or raise the rents. That's what to stay away from. Adjacent building of same type with large vacancies. And that's a simple phone call, isn't it? What's the simplicity of that? Think about that for a second. Tell the broker, say, okay, I want to know. We're buying a 220-unit apartment complex. There's 2 more within a quarter mile. Answer me something. Why do those have large vacancies too? And why should I buy this property? I do not want to be in the same position with a lot of vacancies without income. I want cash flow. Right? I want cash flow. Depressed economic markets, again, we covered that. Properties located in war zones or environmental challenged properties. Okay. Page 58. Now, 10. On page 58, remember, some of the best prospects are those who have to sell, not want to sell. Just like residential, guys. People who have to sell, not just want to sell. People that want to sell want to get a good price. People that have to sell, a lot of times, will bend over backwards to get it done, to take just about any price or any terms. Sellers need buyers more than buyers need sellers. Circle that. That's right there, guys. You got to get in the mindset. Get in the mindset. Sellers need buyers more than buyers need sellers. There's more property out on the market than there are buyers for property. Correct? There always will be. There always has been. It's no different in commercial than it is in residential. It's all about structuring the right terms and getting the deals moving forward with the right criteria. So stick to your criteria. Determining major costs. Now let's talk about soft versus hard. Soft costs, okay? That's entitlements, designs, and maps. Do you guys remember the architectural on the Vegas deal? Remember I showed you that? Okay, that's the design. That's the map. That's the design. Infrastructure is for hard. Now I mentioned horizontal and I mentioned vertical. When it comes to hard, that means hard cost. That's infrastructure. Infrastructure. Right here. Infrastructure. Also construction and repairs. Those are your hard costs. And guys, I'll tell you right now, that's going to take capital, and we're not putting any capital into anything until we know that we're going to be closing on that deal. That's just the way it's done. And we're going to go ahead and go from A to Z, from exit back to finding. That's the way it works. When we go ahead and get exit done, and we know exit, we know financing is in place, then we can pursue the deal. And then again, exchange equity for capital. Pull in the money, partner, and get her done. To determine costs, many engineers will give you an estimate of their fees and rough estimates of project costs, which will need to be verified. Contractor bids during your due diligence. You got to go ahead and verify those contractor bids. Now, I'm somebody who always wants to pay for the best of the best, not cut corners with things, because you get what you pay for in life. It's just, it is what it is. It always has been. Cannot get away from quality work. But I'll tell you right now, if I'm crunching numbers and you guys are on my team, You better understand this, and you should practice this if you decide not to do deals with me. You can go out there and do your deals on your own. Understand something. You have to verify all those costs and get multiple bids. Because when you get multiple bids, you can go back. And I'm not talking about playing the bid game, where you get one bid and go to the other bid and go to the other bid to cut corners and come down on your costs. But just do your due diligence. When's the last time you worked in this area? How many projects have you completed? How busy are you guys? Are you robbing Peter to pay Paul? Without saying it, just like that. How many projects do you have going right now? What are the... I would like to see this, Mr. Contractor, if I may, if you don't mind. Can you just do me one favor? Can you do this for me? Can I just see the last project that you just got through completing? Can you just send me, mark out the details of it. You can even scrub out some of all the name of the organization and everything. I just want to see the date of the scope of work and the date you completed it. I'd like to see that. And I'd also like to see if the project is up and running and everything is hunky-dory. That's all. You're just asking for anything that you deserve to get, right? I mean, that's just nothing more than seeing a testimonial. Somebody that's saying, I love this contractor. They did a great job. They did the repairs. They were on time. Their crew came in on time. They went ahead and did the work. I'm happy. Everything's done. Their scope of work and their, write this down, timeline was on task. And asking to see that, guys, is going to separate the pros from the Joes. And believe me, I'm not too shy to ask. You know that, right? Yeah, and neither should you. Neither should you. Okay. So your project manager will get bids and negotiate with the contractors. And if you deal with me, my project managers aren't shy either, because that's what we do. We're in the business doing deals, guys. And because we're going to go ahead and verify all those facts, we're going to move forward and always get references. Isn't it easier to get references? Who here goes out of the yellow pages and picks out a dentist to go get a root canal? No, it's not done like that, is it? Not me. I went to Western Dental once. Ouch. Guys, I ask people, who is the best dentist? I go to the extreme makeover guy that you see on TV with everybody with the big thing. I go to the best of the best, man. That's just where it's at. That's what you guys got to do too. Get references regardless of what you do. All right? Did you have a good experience with the contractor lately? Yeah? Great. On time? Good price? Good work? Availability is good? All right. Reward on time and punish with a reward work with a bonus that's done on time and punish with excessive delays and fines. You can say, look, the cost of money isn't cheap. And if you're planning on getting in there and giving me a scope of work, it's only fair that if you don't finish on time, we start cutting down some of the cost off your scope of work until you get the work done. Isn't that fair? Now, they'll either agree or disagree. But in the same token, you can say, but if you finish on time and do the right work that you say you're going to do, and I'm happy with you, not only are you going to be my go-to company, but also I'm going to reward you with a huge bonus. Okay? Now, initial seller terms, pre-negotiate. Probe for what general terms you can get. Now, just because there's not enough equity in the asking price doesn't mean you can't create it through negotiations. So make note on that. Just because there's not enough equity in the deal doesn't mean that you cannot get in there and create equity with negotiations. All right? Now ask the seller or broker, what's the least you'll take for the property if we could move quickly and get your problem solved? Then you want to find out if the seller is willing to do any financing. Then what we do is ask and find out if the seller is willing to do a joint venture. And then we find out what particular terms they're asking for. What do they need? What do they need? All right. Page 59. Determine project difficulty and time. Remember, we want to get in, get out, get rich. The deal's on speed and ease. What are the points of most resistance? Write that down. What are the points of most resistance? Is there city restrictions? Is there difficulty in the process? Surrounding residents don't want you there? What is it? And then write this down. Is it worth the effort? Is the timeline reasonable or realistic? We only want to do realistic deals, right, guys? Of course. Evaluate everything on balance, profit, equity now versus upside later. Got to evaluate that. Time. What if the project takes 2 times as long to exit? You need to have those options in there to buy more time and more money. Risks. What are they? Can the deal absorb any additional risks, miscalculations, or delays? Ease and difficulty of the project. Can you get in, get out, get rich with this project? Learn to spot the green flags and the red flags quickly. And that all comes down to understanding this information, processing what we have here, moving forward quickly, and be able to determine the difference between a deal and a dud. All right? There's a rookie mistake here, overanalyzing the property before asking about the terms. Guys, let me go ahead. All eyes on me, please. The rookie mistake, guys. All eyes on me, please. I want everybody's eyes on me real quick. This is going to make a difference to you. Make a big difference. Don't make a rookie mistake. Don't get in there and start doing the deal, all the pre-contract due diligence, without finding out if it's a deal first. Understand when you go back and see Kevin, for those of you who have deals now, we're going to go ahead and break in just a moment, go back and talk to Kevin. He'll go ahead and analyze that deal like this, lickety-split. He's going to be able to tell if it's a deal or a dud. And if it's a dud, guys, you can't turn a turkey into an eagle. All right? Just understand that. Don't make that rookie mistake. Don't get out there and start overanalyzing the property and spend days and days and days and weeks and weeks and weeks, months, looking at the property without quickly determining the asking price versus the as-is value, the future value, and finding out the terms. Deals with the quickest profits are hard to find, so act fast. Remember, you can't steal in slow motion. Get it under contract with plenty of due diligence time, and then spend time doing more evaluation. All right? And in closing, guys, sometimes the best deals are the ones that we walk away from. And I'll tell you right now, my phone constantly blows up after I walk away from the deals because they understand that I know what I know, and they don't know what they don't know. And I shed the light, and the light comes on, and then the seller realizes that he's got a deal. But once he comes back, the negotiations have changed. Rich.